All right, Loan Modification Outlet here. We have former Ditech executive, Jeff Morris. How are you doing today, Jeff?
Great, Brian. Thanks a lot. How you doing?
Doing good. Trying to understand these loan modifications. Obviously, the foreclosure rates, I guess, last year were up 81%, and the lenders obviously are inundated with defaults. Why would a lender, though? I'm still trying to understand, why would a lender want to give a person who's late on their mortgage, who can't afford their mortgage, a better deal? It doesn't make sense to me. Please elaborate on that one.
Well, first and foremost, there is a lot of pressure from state governments and federal governments. They do not want people out on the street being homeless. But secondly, from a lender's perspective, if you had a house that you sold for $500,000 and now it's worth $250,000, and if you take that house back, you're going to basically lose $250,000 plus any foreclosure costs.
Okay.
So, if a client can make a payment, if they can negotiate with a client and the payment is so that the lender can still make a profit after all is said and done, then the lender is going to be a lot more apt to work with a client, basically. Otherwise, they're just plain and simple going to lose a lot of money.
So it sounds like the property values are going down so much that it's actually a good business decision for the lenders. It makes sense financially for them to do the modifications?
Yeah, it's simple economics. I mean,
wow.
if the house is going down, it's half of what it was before, and they take it back, they're going to lose a lot of money. So, and then the house may stay on the market for a year or two. There's no guarantee that the house is going to sell, and the values could still go down. So why not at least try to work with a client and see if you can make both of you happy? Cut your losses. That's the whole idea. You got to look at the lesser of two evils. Is it better to maybe lower the payment enough so a client can stay in the house, or is it better to take over this house? The banks aren't in the business of owning homes and trying to sell these houses.
So that brings up something interesting. So if the market switched, I'm not saying the market's switching right now. Obviously, it could take years to recover, but roll with me on this. If the home values did change and start going the other way and started going back up, wouldn't that mean the lenders would be less likely to do loan modifications? I mean, if homeowners wait on these loan modifications, they may not get them if the market switches.
What indication is there that shows that the economy is going to turn around? I mean, the stock market is having the worst lows that they've ever had. Unemployment rates are all new highs. The market was initially artificially inflated to start with loans that we've never done before. All these stated income loans, all these Alt-A loans, all these things drove the prices up for these houses. Those loans are gone. They're never going to be around again. You're not going to have that artificial inflation. So it's highly unlikely that this market is ever going to go back, at least for another, I would say, 10, 15 years to where it was. It's probably going to drop down significantly more, level off, then the normal market conditions will prevail. Because a client's going to have to provide documentation probably from this point on out and qualify as a regular person. They're not going to be able to do the state income loans or any of that type of loans anymore.
Wow, so if someone has a loan they can't afford, they need to get it modified then, it sounds like.
Exactly. I mean, it's just ridiculous. Even if you're thinking about it, it can't hurt to try, because the inevitable can happen. People are using their savings right now, they're using credit cards, they're taking money out of their 401k just to make this mortgage payment. That's not going to stop the bleeding. I mean, eventually you're going to hit the brick wall, whether it's 3, 6, or 9 months down the line. You're gonna have to face reality. Try to take care of it now. There's a lot of pressure on lenders from the government, federal and state level to modify the loans, to take advantage of it while it's there. Who knows what's going to be there in a year from now?
Yeah. Wow. Pretty shocking. Pretty shocking. You made some good points. Well, I know you've got a busy schedule, Jeff. Thanks for taking time out with us today, and we'll talk to you soon.
Thanks a lot, Brian.